Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading.
Good morning, traders and investors. Welcome to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. We have Chris D. Scarlese sitting in for Spencer Israel, his last day of vacation. Show to talk about today, or talk about on the show, what a rally yesterday. I think John Dodson made a comment here that yesterday was the largest intraday turnaround by points in the U.S. stock market history. We are, well, he's saying we're staying above 2,500. We're green. We'll talk about that last hour rally. Hostile takeover here on December 28th as Green Bond, I believe, is going after APHA. We'll talk about that. APHA is rebuking that offer in a big time way. A couple guests on the show today. We're going to talk to Reverend Emmanuel Lemelson. He's the founder and president of the Lantern Foundation at 8:15. And an oldie but a goodie coming on at 8:35. That would be Tommy Lackey Jr., managing partner and portfolio manager at Relativity Capital. He sent over some nice looking charts to take a look at. And then at 9 o'clock, another old favorite, Sean Udall, CIO of Quantum Trading Strategies, will join us to tell us his likes, his dislikes, and what he's been doing during this market decline. S&P's following through on that big rally from yesterday, up 10 3/4 handles at 25.0575. Pre-market high comes in at 25.19 1/4. That was a number, not a bad number. Your 5-day high is 25.18, so we'll keep an eye on that for continued follow through. On the downside, well, the close was at 95 even, and that was after a run up between 4 and 4.15. But your pre-market low was 2477.75. So if you're trying to short, that would be a target on the downside. I'm not sure we're going to see that in today's action. So let's bring in Triple D. You back at it. You got the computers going, and you're back in full trading mode there?
Yeah, I had to get another computer yesterday. I just I tried multiple times to fix it. Windows tries to do their thing repairing, and I was like, it's not worth it. So I just went and bought a new box. So that takes the majority of your day, though, when you're trying to like put on all your new programs and get everything on there. But anyways, it's hooked up. A little tweaking because you can't ever get your layout exactly the same when you got a new computer, but kind of got it here, so trying to work with it.
What kind did you get?
Obviously.
What kind of computer did you get? Let me guess.
I
was going to say that.
I always buy HP.
I always buy Dell.
I'm an HP guy.
I actually.
Well, Dell, can you buy Dell just in the stores? Can you just buy the Dell?
I mean, you can go to the stores, but I
didn't know if they sold them. I guess they never used to. You used to have to. You remember, you used to always have to order your Dell. You can never just go in the store and buy it, but they sell them in stores now, eh?
That's what I do. And you know what they did? I ordered a new laptop.
You order it, or
I ordered it online because I think my other one it just finally gave out. I've had it for like 8-9 years. But you know what they did? I called up, I ordered it, and within 15 minutes after ordering it, someone called me up from a customer service person, and they told me they could get me a better price. And I'm like, hell yeah. So, yeah, they called. And I think they took $150 off it. So got a new laptop coming. So I'll be looking forward to working on that. But, wow, Dennis, what a rip your face off rally yesterday. And I guess it's important to talk about the rally, but it's also important to talk about, levels that we look at, important things. And I know we talked about this on the show yesterday. And basically, when they whooped the market as far as the S&P futures go, they took it 3 points down below that 50% retracement, and then it was off to the races. Did you get to do any long-term buying yesterday?
A little bit, and I looked at it, and we were down, and you know what? I was thinking this exact same thing you were thinking. It's like the 50% retracement of just the move from yesterday when you're down 500-600 points and you got a 1,000-point rally. The quick math says, you pull back 500, you got the 50%. So, we've talked in this show, we're not, huge fib fans, but we do like the 50%, both me and Joel. So we respect that. And I was like, you know what? I had a lot of money, and I've got multiple accounts. I got my main investing, account that's, not registered. And then I've got like the registered retirement, they call them RSPs in Canada. And I had a lot of cash sitting there. I'm like, you know what? I might as well put a little bit of that cash work. So the only thing I did buy yesterday was FedEx. So I bought FedEx at 156, and wish I would have bought more because it's already 162 here this morning. But that was the only thing that I did nibble on yesterday was FedEx. And I talked about it on the show saying there is value. I feel like there's value here. I know Amazon, long term, maybe is Amazon going to start shipping their own packages. That's going to hurt them. But I think FedEx is still going to be there long term as well. So P's 9 going forward. Maybe it's cheap for a reason, but it's been knocked down 70 points. I think it's just gotten to a point where it's too cheap. So that was the only stock I picked on.
All right. And then we were also on a pre-market show. We were just talking about, targets, in general, using the retracements and, trying to figure out where the hell this rally is going to go. And following the front month contract in the S&P 500 futures, you had an all-time high. I would say it again on that expiration, that September expiration, front month contract, 29.55.5. And then I believe the low was Tuesday night or Wednesday morning. We got all the way down to 23.1675. Take it back
600 points.
Yeah, 600 points. You tack 300 on that. I mean, why not? Why not look at 2,600 for a target? I mean, the way the spoos are moving, the way the market's moving, that's only 93 handles away. That's just I wish it wouldn't do it though. I wish these moves would be more gradual and not
it's so
volatile.
Wild.
It's so
that
crazy.
Rally yesterday, it looked at like 1 o'clock in the afternoon, like, are we going to give this all back? When we were down over 500 Dow points, I was like, are you kidding me? We're going to I obviously don't send the 1,000 point up day. And then I said, I think sellers come in, but I didn't think they're going to come in that hard the next day. Like I thought you'd get a little bit of follow through maybe. And we didn't off the open. They came in hard, but then that rally came out of nowhere. And was something said? Did something spark that rally? Because 2 o'clock, we were right on the lows. And 2 hours later, we were at almost 100 S&P points.
Yeah.
From the low.
Yeah.
It was incredible rally, like 90 S&P points. So and right, Griffin's saying Europe closed, and that's correct. Europe does close right then, right around that 2 o'clock. But what happened? What sparked that rally?
I don't know. Spinner's throwing in here. He thought that yesterday was the bonds. They started selling them at 2 p.m. and a huge asset allocation shift. I don't know. Maybe out of bonds into stocks. I mean, trying to jockey for position at the end of the year too, which is coming up on Monday. A lot of different factors that they could play into that. On this Friday, let's just talk about a hostile takeover here. We got APHA, APHA, and that was a stock wasn't that the stock that had the big short sellers report on it, right? And got knocked down, and I guess that's not scaring green growth brands. They put a hostile takeover for Canadian $11 per share, but the company's rebuking that and just not even giving it any consideration. They think it's way below a valued price, showing a lot of confidence here. Only trading up 72 cents here at 6.29.
I mean, on the hostile takeovers of management, always, they're obviously hostile. So there's rarely on a hostile takeover the management's going to say, okay, let's do it. I mean, so it's not surprising that APHA is going to say those things. But it's a vote of confidence, a huge vote of confidence here, if this is a legitimate offer. So, where we've had obviously a lot of issues, a lot of allegations made against APHA. It's a big vote of confidence for it. It's a breakout over 6. That's the good news. The bad news is this thing traded up over $7 last night. It's already pulled back to 6.25. So it's given back a lot of the gains. More bad news is really not a lot of sympathy here this morning. Aurora Cannabis not trading up at all. Even last night, NBEV's up 4 cents. The market's up significantly here too. So you're not really see this sparking a rally in all the pot stocks here. But APHA is trading up. It is trading up 12% here in the pre-market. So those who've been buying the dip, and even 2 days ago when it got back down into the 4 handle, getting handsomely rewarded here already, making over 50% on their money in 2 days. So can't argue with those returns.
Yeah, you did mention that pre-market spike up to 739, and that's an interesting.
That was after hours
yeah,
last night.
After hours, and I think this whole $7 level. I mean, I'm going to throw out the takeover offer there, but I'm just going to look at the high when. I don't know if it was the day of the bad news. It must have been. It gapped down. You had a high at 691. So I would still keep a close eye on the $7 level. We did get above it in the pre-market. Also, keep your eye, and who knows, they may, if they come and try and increase the offer, it may be a little bit more appealing. But Dennis, you mentioned a term here, and it's pretty much self-explanatory, but I know it's a big part of your trading, and it's sympathy trading. And, just give us a 15-second wrap on that. The term.
The stocks in the sector are going to move. So I think, if you've been listening to the show for any time, we talk this every single day. We talk about the sympathy moves. We've said, sometimes, in the last year, the sympathy hasn't really been playing well. It's playing pretty well right now, probably because everything is just moving together. If you look, correlations have really, since this market has went into the whipsaw markets of the last 3 or 4 days, it seems like every stock is moving together. You get all Dow 30 components up, all Dow 30 components down. You used to see separation where you'd see some of the XLP, the consumer staples, go down when the market's going up, or the staples go up when the market's going down. That all started getting correlated when Johnson & Johnson started breaking down. They all started moving together. So now you see even the defensive stocks, correlate well with the overall S&Ps. That will not last, but right now that is happening. And you've got to understand, this is what relationship-based trading is all about. We can toot our own horn. This is Bright Trading. We specialize in this stuff. It's relationship-based trading, market-neutral trading. What market-neutral trading is trying to eliminate market risk and obviously extract the alpha from the relationship, from the inefficiencies in the relationships between two securities or between dozens of securities. So right now everything is kind of correlated. So when you get one stock down, one stock up, you can kind of almost put on anything. Like I pair up everything right now because in the pre-market and after hours, because all stocks are kind of moving together. But once those correlations start breaking down, which they do, you got to be aware and you got to unwind that stuff very quickly. So Coke isn't always going to go up 0.5% when the S&Ps are up 0.5%. But right now that trade is working. So just understanding those different relationships can really help. And that's the one advantage a human has over a machine, because machines are going to do what they're programmed to do. Well, if it's changing on the fly every few days, there's no high frequency trading program that's changing on the fly too. Maybe there is if they're really, really sophisticated, but I think there's very few. So that's why I'll always say, the human can switch, and obviously start employing a new strategy immediately, where it takes time when you're running a high frequency trading program to do those strategies. They often want to back test them. They want to make sure there's no bugs, because when you start running a high frequency trading program, it's got bugs. We've seen, what happened with Knight back in 2012. You cannot have mistakes when you're running high frequency trading. So that's the advantage that a human has. And I think there's still a place for human. You hear about the algos and everything's controlled by algos, and there's no way to compete with the algos. And what I've said, I haven't said this for a while on the show, but I did a lot of algorithmic trading back from 2005 to 2010. And we were basically high frequency traders. I had envelopes running, sending thousands of orders and doing different things. And I've backed off a lot of those strategies, mostly because the high frequency traders have monopolized a lot of those. So there's not as much advantage in that anymore. But I hear this all the time from traders. Oh, how do you compete? How can you, trade if you're not trading algorithmically? Now, I feel like the human has a bigger edge here now because there's less human competition. High frequency traders have taken out all the human competition. You look at the NYSE floor, there's hardly anybody humans trading down there anymore. It's all machines. So when you get, the humans, and there's the crazy markets like this, we can really adjust fast. We can adjust on the fly. And that's a big edge to the human trader, where the machines are going to be slower to adjust. They're more efficient once they're programmed in. But if it's changing all the time on them, a lot of these high frequency trading programs could be scratching their heads.
All right, it is 8:14 here, and we're going to bring in our first guest of the day, and long time guest on the show. I'll actually tell a quick story how I met the Reverend Emmanuel Lemelson. It was a Friday. This must have been back 2013, 2014. He made a big call on WWE, and Chubb said, "Hey, take a look at this, write an article," and I wrote a short article on it, and then we hooked up through LinkedIn, and he's come on the show. So we're going to bring him up, dial him up right now. Reverend Emmanuel Lemelson, founder and president of the Lantern Foundation. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Chris DeScarlees working the boards. And we are joined on the line by Reverend Emmanuel Lemelson. He is the founder and president of the Lantern Foundation. Reverend, how you doing on the last Friday of 2018?
Thank God, all is well. Had a wonderful nativity season, and looking forward to the new year.
All right. Before we get on to the market and, individual stocks and some of your positions, I just, you've been in the news lately. I just wanted to ask you how things were moving along that, if you wanted to make any comments.
Absolutely. Well, Joe, we publish so much on our blog, mbona.com, which is A like Adam, M like Mary, V like Victor, O like Oscar, N like Nancy, and A like Adam.com. Or you could visit our website, lemelsoncapital.com.
Okay.
We certainly have been making a lot of headlines. There's a saying that if you speak well of me, do so often. If you speak ill of me, do so sparingly, but just speak of me. I hope that's true. But certainly fascinating news, fascinating case. I think everyone interested in public markets, or even has a passing interest in the legality of some things, should certainly visit our site and read some of our postings.
Okay. All right. And the people can make their own decisions on that. So let's move over to the
let me ask you, Joel, what do you think? It sounds like you've been following the story too.
I will let the courts battle it out as well too. I mean, we've had a long-term long-term relationship and stuff, and reading the stuff makes a lot of sense to me. So we'll leave it in the hands of the courts. But moving on.
Good to know.
Going on
go ahead.
To the markets here. Wow.
Mm-hmm.
A lot of volatility here. Have you been able to take advantage? I mean, I know you like to buy. I know you like to sell and short here. Have you been, able to take advantage of the recent volatility?
Yeah, Joel, not so much. So our fund was up pretty dramatically through the end of November, but like everyone else, we were down in December. Well, I shouldn't say everyone else. I'm sure a lot of short sellers did quite well in December. Over the years, Joel, I've talked about shorting not being a good business, and we've really tried to move away from it.
Okay.
Really tempting to do it, of course, when you think that the market is generally a bubble. And if you listen to, I want to say it was our February 2nd interview of 2018. So about 10 months ago, we talked about, the great risk of the market, the cyclical nature of the market. Bitcoin was at $9,000 at the time. I talked a lot about just how absurd that was looking, and generally the risk of frankly, of a crash. And that's sort of what we saw in December. I mean, really extraordinary volatility. I believe that the major indexes declined something like 14 or 15%. Nonetheless, we've really moved as a fund into more of just thinking as long-term business owners, which I think is the highest form of investment. So it's great to short. I mean, especially if you're an activist short seller. I mean, in a rising market where, here we were in the longest bull market, really on record by some accounts, about 10 years, there's going to be fraud which emerges. And so there's always that temptation to expose that and to short it. But at the end of the day, I think it's far better policy simply to be an owner of a productive company where you have some insight into the future cash flows of the business. some understanding of the quality of the management team, and presumably a company that has a defensible moat. I think that's always just the better route, and that's really what we stuck to. So definitely a lot of volatility, but if that's how you view yourself as an allocator of capital, as an owner of a business or a piece of a business, prices in the near term should not really affect you too much, other than perhaps big buying opportunities. So there are some great values out there now. I mean, there's no question with this huge drawdown. I mean, this sort of greed turned to fear so quickly, as I've often said it could on your show. You see tremendous values out there, and great opportunities
And
to go along.
what about now? I mean, you had that low. I mean, basically 200 S&P points lower just a few days ago here. I mean, were you able to add to any of your longs here? Or you just kind of riding your positions out through the end of the year?
Yeah, we're just riding them out through the end of the year. We're basically fully allocated, Joel. But I didn't to say there aren't things that we'd like to have been buying, but we have already very significant commitments. We certainly think, for example, in retail, there's tremendous opportunities. We talked a little bit on your show about Bed Bath & Beyond. We didn't have a position as it drove. The price went down even more dramatically. I mean, we thought it was a great buy at 18. It's now between $10 and $11 a share. Pretty extraordinary business if you think about it. About a $1.4 billion market cap, just over $1 billion of that in cash. And then the company which just threw off $750 million in free cash flow from operations in the last 12 months. So that's really extraordinary statistics. The company with growing revenues for a very long period of time, an iconic American retailer. Hard for me to see where that's a very risky place to allocate capital. Also, you're getting almost a 5% dividend. So I don't really see any existential threats to that business. Of course, the media is not very nice to them. You have all these analysts coming out and putting low and lower price targets on a 10 or 9 or something crazy like that. But, for the record, I think it's worth more like 40 or 50. And I wouldn't be surprised if in the next year we see it return to that sort of valuation, because while there was some gross margin contraction, that's true. I don't think that's at all unusual for a retailer. And I don't think there's anything fundamentally wrong with the business. So it's like a value investor's paradise, really, when you start to see things like that. They've been really hard to find over the last, let's say, 4 or 5 years, as markets have just, in my mind, become unhinged. So I think we're seeing a lot more normalcy in price value relationships, and hopefully some of this mania has gone away from the market, where you just buy anything, especially like a FANG stock or something, it goes up tomorrow. That's probably the scariest environment you can be in.
And I know you've been a long-term investor in Apple here. It has been replaced as the most valuable company in the S&P 500 by Microsoft here. Quite a nice decline. I mean, they kind of gave the handwriting on the wall, like, hey, we're not going to tell you about how many phones we sell anymore, which is not a real good sign here. And it's pulled back here at the 157 area here. You're still finding value in Apple, and do you perhaps have a target on the upside?
Yeah, truly great company. We said on your show, actually, Joel, I want to say it was 2014, maybe 2015. We said, look, we think it's worth $200 a share. And at the time, I don't remember the price. It might have been $90 a share, something like that. And, of course, it went over 200. And, one of the great companies of the world, for sure. We don't own any right now, but we're looking at it again at these prices, as the prices come dramatic. You look at this story that's being told, right? By the pundits, and it's the same sort of story that was used in 2012 or 13 or 14. Oh, the market's saturated, demand is slowing. But I really have a hard time understanding that thesis, because, as an iPhone owner myself, if my iPhone died or I broke it or it fell or something, or just became obsolete, really, like, the world would stop turning, right, if I didn't replace it. So, but I've been saying for a long time, if you read the annual reports on Lemelson Capital, you don't have to register, you just click on reports. I've been saying for a long time, it's really a services business. I've been saying that at least since 2013. And I don't know about you, Joel, if you are an iPhone guy, but my credit card gets pinged every day for services on Apple. And I think that's an incredibly strong ecosystem. Nobody feels bad about the brand, right? Facebook, the chickens are coming home to roost, right? That we have a saying in Greek that you can tell a good day from the morning. Facebook sort of began in scandal. It was birthed in scandal and bad feelings, and that's really catching up with them today, all these years later. Nobody has those feelings about Apple. People generally just love the brand. I recently got a new MacBook Pro. I told my family, I said, I want to be buried with it. People love the product. I don't think it's going anywhere. I think there's a lot of noise out there, of course, from pundits, but I don't see those same feelings with iOS.
Real quick
Excuse me,
here,
with
I
Android,
just
and with
want to
Samsung.
I just want to throw something in here real
Sure.
quick.
Go for it.
Larry Ellison of Oracle founder, has been added to the board at Tesla Motors here, and the investors like that. Tesla's popping here, up $8.36. Let's see if we can get a target on the upside here. Well, it's coming up on your 2-day high, folks, 326.97. If you're so inclined to take a target. All right. Well, my mother-in-law called me the other day, and she said, "What about my investment in GEOS?" She said, remember that? You told me to put my mother-in-law on that one. And she's not too happy with me, Reverend. Boy, stock's been hit, with oil and stuff. You've been trading in and out of it. I see it goes up to $15, $16. You sticking with your long-term thesis on GEOS?
Yeah, well, I don't think I should put your mother-in-law on it. I mean, I think I once made a joke that you'll mortgage your grandmother's house or something like that. Obviously, it was joking, but we are still major owners of the stock, and we intend to be for the long term. We own over 1 million shares. And, Joel, if you look at the conference call, these guys, I've never seen anything more bullish. They're saying they can't manufacture the orders fast enough. They've got a highly diversified business now they've got the water meter cable business, which is growing in leaps and bounds every year. They're into the borders and perimeter security market now with this recent acquisition they made in Florida. And of course, their OBX rental business is going gangbusters. So look at the order recently from CGG, one of the competitors, 100,000 land-based geophones. That's an enormous order. Look at what's going on with ADNOC. I mean, even though oil has been very volatile, the idea that we're not going to be able to meet demand without exploration, I think, is already set in big time. Exploration on the Eastern Seaboard has been opened up again by the Trump administration. When the company says that they're allocating $30 million for new rental equipment and they can't fill all their orders, why it would be trading below tangible book value is a mystery to me, other than the fact the management team is not doing an effective job communicating with the market. That's been a major criticism of mine, of course, of the CEO, Rick Wheeler. But the business is extremely sound. There's tremendous research and real research and development there. They make the best mousetrap, in my opinion. And there's an enormous margin of safety in the business. So we predicted in our letter earlier this year that they need to get into the fiber optic business for the Purion systems. They finally did. And we suggested this a year earlier to the management team that they acquire that ability, which they did recently, and we think for a pittance. And if you look at the structure of that deal, very small amount of money up front with a 5-year earnout. That, in my mind, is an indicia that our thesis is correct, that they probably have a large PRM contract in the offing. We think it's from Petrobras for the Libra and Roncador field. If I'm right about that, I think that contract has a value probably north of $200 million, maybe $250 million. I don't know how that stock doesn't appreciate 4 to 5x. Okay. And that's been our thesis for a long time. So has the timing been perfect? No. Do I care? No. I think we're right. I think when we're proven right, the returns can be tremendous.
Okay. And anything else on your buy radar? Maybe for your portfolio, short term or long term?
Yeah, I just want to say Elon Musk is a sissy. Since you brought him up. Interesting business, but the way he handles his problems with the regulators, I thought it was disingenuous. If he's so right, why did he settle so quickly?
I don't know, because he did so much wrong. It'd be a lot easier just to sweep it under the table than keep it going. But all right, we're gonna wrap things up here. We've been on the line with Reverend Emmanuel Lemelson, founder and president of the Lantern Foundation. Father, enjoy the rest of 2018, and we'll be checking in on you early next year.
Great joining you guys. Have a great day. Thanks for having me on the show.
All right. S&P is kind of bouncing around pretty good here. Still over 2,500, up 950 at 25.
Tesla ripping.
Yeah, look at
That's huge. Get Larry Ellison on the board. It's a big name.
Yeah.
I think that helps. Yeah. And not surprising. That broke was 318. It's up 12 points since that broke. So that's a big move here for Tesla. And I was just talking with Spinner in the chat there. Definitely got a little bit of remorse for not buying yesterday. I said yesterday on the show, I like Tesla in the low 300s. Should have pulled the trigger, got down to 301.50 yesterday. It'd already be up 30 points, man. So this is a stock, though, like I said, when I have this in my portfolio, I find I don't sleep at night. So, I value sleep more than, I guess, owning the stock. But in any regard here, big move here for Tesla, impressive move on stocks. I think it's warranted to a certain, I guess, a big name. So gives it definitely a vote of confidence.
All right. And was there anything there to lift when that news came out, or was it?
Well, you could have bought 320. Yeah, you could have paid out. And I was going to pull the trigger, and I looked at it, I hesitated, and then it's gone. And then you got to buy 321, 322. And, it's a big move. It's a big name, but, you're seeing the headline break, and sometimes you strike and sometimes you don't. And we're doing a radio show here, and we're doing some other things, and that's a wild stock to trade when you're doing a live radio show.
And I mean, how much does it really add? I mean, it's a big vote of confidence, right? I guess it put it that
I think that's what it is.
Yeah.
It's a big vote of confidence. Is it really going to change anything there? No, but that vote of confidence is huge. So big name on the board. I'm not surprised the stock's up 13 points. I think it's warranted. That's a good move. And I would say I'd be a buyer pullbacks on Tesla. I don't know if you're going to get one or not, but the stock is hot.
It's still that big old trading range, I mean, I think it 300, it kissed it yesterday. And I guess if you're a really technical trader and you were actually looking for a double bottom here, you did get that right at the like 295. You had your lows 295.20 and 294.09. So for a $300 stock, when you have lows within $1.11, it's good enough for a double bottom with me. We're going straight up here. We took out your 2-day high. Buyers are coming in. Let's see.
Holy.
Yeah.
As this rumor just goes through. I mean, it's a big name. I should have lifted that 320 and not even thought twice, but I hesitate. You hesitate when you're trading. You hesitate for a couple seconds. You miss, and then you're going like a 321 or 322, and then you're like, well, I could have bought 320. I mean, hindsight 2020, obviously, it's 332 here now, so should have paid up, but should, could have, would have. It doesn't make you money.
All right. Hot off the press imbalances here on the last Friday of the year.
GE 427,000 to sell. So every single day we've been talking about there's still a sell imbalances in GE. Although, again, you could have been playing it off the 666 2 days ago. Got down yesterday to 695, day before to 677. That 666 low continues to hold. I'm going to keep saying I think the low is in GE. And you could have been playing it a few times off of that now. Alibaba 22,000 to sell. It's really small. They're all small, Joel. That was the only one that really jumped out at me, was the 427,000 to sell in GE. So other than that, institutions holding their orders very close to the vest this morning. I don't see much in imbalance land.
And GE down 3 cents here. I mean, yeah, that is a big order here, but that's a pretty thick stock as well. So
yeah, but it's the reason it's down, because if you look at 8:30, it was, well, if you just scroll back and look, probably before that imbalance data came out, yeah, it was trading up at 7:30, so it came back 6 cents when that imbalance came out. This is why sometimes you see moves at 8:30. That's when that data comes out. And at 9:28, they post for the NASDAQ, and it's also when you get the opening indication prices. That's why you see wild moves at 9:28.00 in the stocks, because stocks have projected opening prices then, which, on NASDAQ are pretty good, because they often, there is some people, some traders probably that can get the orders in there, but for the most part, they close those books up. So the majority of traders can't put in new orders after 9:28 to participate in that opening print. So when you see these NASDAQ openings, those are usually pretty close to where the stocks open. Sometimes there's a little bit of movement. And then the New York opens obviously still moving on the fly, but that's when they post their openings as well. So those are the big times, 8:30.00 when you get the New York imbalances, 9:28.00 when you get the NASDAQ imbalances and the projected opening prices.
All right, a slow week is analysts are taking vacations and away from their desk, and especially in this kind of volatility here. But we did get a move in Wingstop here. Wedbush upgraded the stock from neutral to outperform. But you know what they did? They lowered their price target from 71 to 69. So kind of a double-edged sword there. But Wingstop stock hit $72, pulled back. I think what you'll say is just don't like the valuation on it. Dennis?
Sorry, I'm trying to mute it off and on here because I'm on my trading computer, and as I type, you can hear me typing. So I'm trying to mute off and on. So I'm on the toggle and then mute continuously.
Oh, you do that at least once a show?
I don't ever do it. You know why? Because I got it on the other computer. But anyways, normally have it on the other computer. But because I had my computer die on me, I went and quickly put Skype on my computer here, my trading computer, and that's why you hear my typing. But I'll put Skype. I'll have to remember to do that. I'll go ahead and put Skype on the other computer there, and you won't hear my typing. So if you heard some typing in the show, it is my fault on that. And also, we're trying to work the mute switch so you don't hear my typing as much, because I'm typing continuously. I'm just
I hear you.
Wing stop here. I don't follow the stock at all. I know, I trade every once in a while, but I don't follow closely enough to really give you a fundamental look or anything on it. Never ate the wings either, so I can't tell if I like the wings or not. I'll just say you're getting an upgrade here. Yeah, you're right. Price target lowered. I'd say you got major resistance up to 65. That's about 2 points, 3 points higher than it's right now.
That is what. Yep, that's what jumped out to me here. And actually, it's a quad top at the 65.40 area, but that's might not even come into play today. Yesterday's high 60.62. We're trading above that. So next target on the upside could be your December 20th high of 62.05. All right, on this Friday here, we're going to bring in a frequent guest earlier in the year, Tommy Lackey. He's managing partner and portfolio manager at Relativity Capital Advisors. We'll be back in 34 seconds. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. We are on the line with Tommy Lackey. He's a managing partner and portfolio manager at Relativity Capital Advisors. Tommy, how you doing on this last Friday of 2018?
Doing great. How about you guys?
We're doing good.
I guess I'm just happy to still be here after all this.
Yeah, you think so? I mean, I know you like to play, both the long side and the short side of the market here. I tell you that break. I mean, as much as I love to play the short side, I tell you that I just tried to buy everything just a little bit too early. I was looking for the turnaround, but how did you fare? Were you able to catch some stuff on the short side and get some decent longs here when we bottomed on Wednesday?
No, I was a little more on your area. I didn't. I guess I did not believe my own eyes in some instances. We pulled to a lot of cash and didn't do a whole lot in a lot of areas, and things actually, just because of a few various holdings, held up really well through early December. So I think I had a little bit of false sense of it would turn quicker than it did. So that last little dive there after the Fed meeting was pretty painful. But again, like you said, you got to still be there. You got to keep your head in the game enough to be able to try to capitalize as you do see good things. That's one of the toughest things about what we can, or what we try to do, is that, if you get demoralized in the middle of it, it's hard to make those buys when you actually need to. So,
when they're staring you at the face, that's tough to pull the trigger. So we talk tentacles on the show. We talk fundamentals. We talk analyst ratings. We talk the Fed, but we don't talk about the breadth much, the breadth of the market. And a lot of people do here. And you sent us some interesting charts here with the breadth. We're going to pull up the first one here and tell us what we're looking at.
Okay. I got to make sure I can see which one you're on.
The first one you sent.
There we go. Okay.
Yeah, the first
That's
one.
Moving average breadth. And moving average breadth, basically, I take, and I have in my own universe of 3,300, or actually about 3,200 now, optionable, shortable stocks. They're only allowed to be in my group if they're optionable and shortable, because I just think that's a better liquidity provider in a lot of cases. So about 3,000 there. And this one shows right here that as of Wednesday, or after Tuesday's session, which was so painful for so many, we were in a situation to where the percent above the 200, or the 20 simple moving average, which is the bottom one in the green, was all the way down to 3.6%. The 50-day moving average, which is the blue one in the middle, was down to 5.03%. And then the 200-day moving average down to 8.96%. That's over 3,000 securities. That is huge to be down that far. And as you can see, we came down back in February a little bit, closer to those levels, but the 200-day moving average held up really well back then. And this time it just cratered out. Usually, that's in a situation to where we don't see those readings until the markets are actually past the bear market kind of realm, especially with the 200-day moving average, which is the top one in the red. We don't see those readings as early as we did in this, which just also speaks to the velocity of this move down that we had. Is something that, people will say, if you've just been in the market since 2009, you haven't seen this, or, you haven't seen a bear market. This was, I think, more than that. And the velocity, I think, really caught a lot of people off guard, because it's just not something, I've only seen it on charts a couple of times back in, 2002 and 2003, and then maybe 2007, 2008, but not, it's getting pretty big. And that was after a longer, more drawn out pullback. So that's one of the things that actually gave me the feeling that, we were getting stretched. I hate the rubber band analogy a lot, but sometimes it is apropos. And I think that is here, is we're getting stretched to a point to where we may not be going back into a bull market, but we're at levels that we're probably not going to stay down here that long. And that's kind of where it went into Christmas, even though it was not a fun Christmas after Christmas Eve. From that perspective, just put my mind on my family for the day and then came back and looked the next day. So that's the first one. And if you'll flip to the next one, which is the McClellan chart that I run on the same index, or the same universe of stocks. And you look at this McClellan chart, and this is, I think, what tricked me and other people, is if you look back in October, you'll see that the McClellan oscillator, which is the small blue in the middle, made not only an extreme low, or very close to it, past my normal extremes, it also diverged off that low. And historically, that has been a very good signal. So when that signal failed, it was really one that was a little more disbelief, because the stocks and the breadth was starting to hold up pretty well, again, until we saw that last failure and then just the waterfall slide down. Now we're in a position to where the oscillator's way down to a point that I've only seen, probably, this chart goes back to, not on here, but I have this data back to, I think, 2000 or 2002. And in that situation, 2000, I think, and in that situation, you just haven't seen this level more than 2 or 3 times over that entire period. The summation index, which is your longer term up top, it was hoping for a little bit of divergence, but it did turn down, and it broke the idea of that divergence. However, this level that we're at, which unfortunately I cut off in this picture, but this level that this particular chart is at, is a good turning spot for for correction basis. So, a lot of people are saying this is definitely a bear market. We're going to stay down here forever and move sideways forever and chop forever and all that. And whereas I believe that's certainly a higher probability than we may have expected, I think I would be concerned if I put all my weight in that idea, because the velocity of how we got down here and the level of where we are, and the fact that the losses are in that anywhere from 18 to 22, 23%, which bear market or not, whatever, that's a spot where things do turn around a lot. And then even though the economy is slowing, so we have to keep an eye on that, but a lot of these companies that have taken 30, 40, 50% haircuts still have some very strong fundamentals that are sitting behind them, that I think if things can settle down, I'm not sure this is necessarily going to be a long, drawn-out event.
All right, let's move on to the next chart here. And this is a nice looking chart here of Mr. Softy, Microsoft. Tell us what we're looking at here and what the potential trades are.
Okay, we're looking at the daily chart. And as you can see in that waterfall, it came down below some pretty solid support, both on volume support as well as chart support there around the 100 level. Now, the problem we run into with this and a lot of these charts that are good names is that I'm not necessarily saying you can buy them today if you're looking for the long-term play out of it after the 2-day run we've seen and probably some follow-through today. But I do think things like this need to be on your radar, and I think if we get any kind of consolidation or if you get a comfortable pullback, you can give it a shot. like with our Microsoft here, that 97, maybe 97 level, if it pulled back a little bit, would be what I'd want to kind of work against, not necessarily let it get all the way back to the low. But in situations like that, you've got a strong company. It's got some good growth still in it, especially for such a large entity, and it's got some good cash that it can put to work with some of these other guys that've gotten beaten down if it decides to, and maybe boost its opportunities in some of the newer markets. So I think it's one that, it's a little bit more of a larger, I won't say safety play, but a larger company play that might be a little less volatile in normal situations, but you might be able to catch some good upside volatility as long as you stay nimble and keep your stop tight.
I mean, of all the stocks, the big components in the S&P I found, I mean, that one really held up well. I mean, it was stubborn going down here, and now you're back near the 102 area. We're trading up 62 cents, but excellent relative strength in Microsoft during that decline. All right, we got one other chart to bring up here, and I believe ZTS here. Is that Zotis? Is that the
Zotis? And I went to the weekly chart on this one. I want to make sure that that's clear. And there are a lot of weekly charts that look like this. So if you look at this on a daily chart, it looks like it just got killed short term.
Yep.
And there are some that are even stretched much further down like that on the daily chart. But if you flip to that weekly chart, notice in the bottom, some people don't like indicators. I think they serve their purpose. Notice in the very bottom window that RSI stops at 40. And starts turning up this week, and the MACD, after a long high rise, is now stopping and trying to curl near that flat line. Those are two good technical signals if you put them here with the price level as well, and looking at how important that 80 level looks here. You got a strong run up back in the late 2017 area right there, a big pullback quickly, and then it retakes that 80 level. So I think that 80 level is a strong level to be working against at this point and to be paying attention to as well. And with the potential of the indicators, the momentum indicators below turning up at an important level, 40 is a very important level for RSI for me. So turning up there, I think gets you a good shot on something like this. And I think if you have problems with some of these dailies, check over to the weeklies and kind of see where they're landing. Doesn't mean you don't stay nimble on the daily side, but at least it gives you a little more guidance on kind of how and why it stopped.
All right. Then your final chart here Atlassian Corporation here. I'm pulling that up. Just talk to us about what we're looking at here on this chart.
Yeah, this is one of the ones I've watched the whole time during the downturn, and it's a younger company. It's a high growth company in the software side of things, and it's one of the areas that is really not only held up in November, as you can see, it pulled back and it started turning sideways, but in December especially, it was a rock star. I mean, if you look at it compared to other high volatility and high growth names in its scenario. And, again, after a 2-day run where it is now, it might be hard to put in at this moment, but you've got a nice cup and handle. I mean, a very well-defined cup and handle here on this chart that looks to be breaking to the upside here.
From Jazz in the pre-market chat, do you think the market has seen the bottom or more down to come, and what levels? I mean, that's a tough question. Yeah, 200 points, 200 S&P points above that low. I mean, if you're leaning on that, you better have a big old stop here.
Yeah.
I just, for me, I see more, because we're always much closer. I see a better probability going up to the $2,600, $2,650 area than us go down and testing that low. What's your thoughts, Tommy?
Well, I think this is an important thing to take into account is, number one, with the extremes we hit on a lot of the oscillators, both breadth and momentum, we do have to keep open for the idea of another retest. We've been talking about retest now for 6 months, it feels like. But we do have to keep that idea open here because of how fast and swift those extremes were. However, I don't know if it's necessarily going to be within a couple of weeks or a few months. And so that tells us a lot about how much bounce or how much back and forth we could have in here. And that goes back to that scenario of, again, you've got to get over certain upside levels before you start thinking about the idea of us not returning. At this point, any bounces up to that, like you said, 2650 level, or even as high as I think the 2800 level could be possible. And then we have to regroup and see. I've talked to you guys for years about the fact that I don't like putting specific targets on things. I like to put evaluation levels because we don't know what's going to happen at those levels. We don't know if it's going to turn us back down or not. But I do believe with the weight we've seen on this velocity down, we have to leave that opportunity open. But I also want people to leave the other side open as well, that might not happen. And I saw a lot of people in my days back in 09, 8, 9, and 10 who really still have never made it back into the market because the shock was so big. They just were not able to bring themselves to come back in. And that's why I think there are various strategies, whether you stay nimble and with tight stops or whether you do partial trades where you break it into pieces. Or even, one of the things Mark Douglas used to talk about a lot in his books is taking a larger trade to begin with a tighter stop. And then as soon as it works in your favor, take a third or a half off and just run a trailer. And things of that sort. I think each person has to figure out their style and what's going to work with their particular portfolio and their ability to pay attention on a regular basis, whether they're a full-timer or a part-timer. And I think that's going to play a lot, but I think you got to be real careful on the idea that, I'm just going to wait till we see new lows and then I'll start working with this. I'm not sure after what we just went through, and also the discussion about how much of it was forced liquidations of hedge funds that were shutting down by the end of the year, if that plays out at all, and that's just a narrative. If that's part of the narrative that actually plays out, it would make a little bit of sense why we got the level of velocity we did over this last couple of weeks. So I'd be careful in projecting it out too far in the future.
All right, Tommy, one thing that we really, when you came on the show earlier in the year, the past couple of years, we really liked when we just threw some tickers out at you, and then you had to do the work. And
Sure.
So we're going to do that, and we'll see if we can catch you off guard here a little bit. GLD, the gold ETF. Gold has had a nice rally here while the markets decline. I don't know. This is a tough looking chart here. I mean, I haven't figured out the 50% retracement yet here, but are we looking up here for gold 1,300 and beyond, or is it just going to flop back down to 1,200 again and sit there for 8-9 months and then I don't buy it?
Well, if we're looking at GLD, look at 122.38 is where the weekly cloud comes in, and it's underneath that now. So that would probably be a big source of resistance if it heads that direction here shortly. On the other side, it's made a good run. It's got over a lot of the moving averages, but the 200-day moving average is still sloped down. So if these markets do catch traction, it would not surprise me if this comes off pretty quickly. You look at the weekly moving average as well, and you've got the 50, the 100, and 150-day moving average all converging at between 120 and 120.50 on the weekly side. I'd be careful getting in here. I figure what I would look at from a profit-taking standpoint is probably below around 119. If it lost 119, I'd probably be ready to take a break here on this particular chart.
All right, we'll do two more real quickly for you. Boeing, a company that just continues to get huge orders and a backlog for who knows how long here, but boy, oh boy, this one's starting to come off the low. Any thoughts here on Boeing trading up 236 to 319.50?
Yeah, you had a failed breakdown below 300. I mean, that's a pretty quick and easy. Now, again, you would have loved to have got it when it went back over that the high of what's that day? If you're playing the failed breakdown, you would want to see it close that gap on 12/21 to the close. So I'd be looking at anything over 305 would probably be a good spot on that one to have entered. Here still, though, again, you just got to see how it plays out, and you got to see if you can find a spot. Some people can go intraday on a 30-minute chart and find them a good stop to get a piece in. But if you're doing dailies and all of that, 2 hard days, it's running up and it's coming on up now. The 321 is the 20-day moving average, which is down sloping. So it may take a little time on this if the markets do want to pause after a few days of this run. But I do believe that failed breakdown is a big deal, and it's something on a company that has good, strong fundamentals here you can look at. From a weekly standpoint, over that 320 area is really where it starts to get more positive as well. But if you look at the weekly, the RSI held at 40, right around the 40 level, both times in both November and December. So that's another good positive.
All right, KB Homes, KBH here, kind of tight here over the last couple sessions. Home builders been under pressure with the impending recession here. Double top 1943, 1955 here. Maybe get up and test 2024. That's a big move for that stock. Any thoughts on KB Homes? And what sticks out to me in this chart here, folks, it has showed some relative strength. I mean, it's been a relative dog here in 2018, but you had a gap down low. That was probably earnings. This was back on November 15th, 1682. But you didn't even sniff that level here on declines. Any thoughts on KBH?
Yeah, you just said most of it. You look at the weekly, it looks terrible. It's at the 200-week moving average. It's worked right back up to it this week. You flip down to the daily, but as well on that weekly, you look at the RSI, and it's working on its third divergence on this way down. And the MACD, both the histogram and the regular, are working on pretty heavy divergences as well. So those divergences could potentially play in short term, and then we have to see what kind of buying comes in as that happens. But on the daily, you're looking at an inverse head and shoulders, and you're right at the bottom shoulder. So, honestly, I think you could play against this week's lows from a real tight perspective if you wanted to, and see where it moves to and try to move things up. Or, like the scenario that I mentioned earlier with like a Mark Douglas scenario, you either do partials on the way in and buy as you hit levels, or if you think it's just going to head up to that neckline and maybe you want to take some profits there, you buy a larger piece now and take half off at the neckline and see if it breaks.
We've been on the line with Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Tommy, we got to get you on a little bit more frequently. I could just keep going with the symbols here, but we're up against the clock. Have a happy new year, and I look forward to chatting with you in 2019.
You too, guys. Have a great new year, and we'll talk to you soon.
All right. S&P is holding up here in the 2,500 handle, up 11 handles at 2506. Triple D, I saw you banging away on the keyboard there. Getting some movement in some stocks.
Are you still hearing me bang away on the keyboard? I'm muted.
Just once. I just heard it once.
Okay. It should when I'm muted. I shouldn't hear me banging away on the keyboard anyways. I'll have to adjust that after. Yeah, you're seeing some movement here. GE 700,000 to sell now, so that's
it's holding
here.
up though. I mean,
trying to hold it. Well, the market's way up. The market's up 0.7%. So you got the ARB. People are just saying, hey, GE is going to come right back up here once this thing opens. They're going to open that low, or they're saying it could possibly, institutional buyers could come in as well. So there's a lot of, on every single stock, there's multiple factors that work all the time. The straight up arbitrage is always in there. I mean, whatever index it belongs to, the index starts rising, we'll put buying pressure on that stock. Then you have individual stock news, obviously, that always moves, stocks around. And then obviously you also have, stuff like imbalances. You see a huge sell in the market, it's going to push the price down. So all those factors, add up to where the price is going to be. Obviously, right now with the market trading up 0.71% and GE trading down 0.55%, they're putting a lot of weight on that 700,000 share sell imbalance. We know GE is a thick stock. It'll chew up 700,000 within a dime, I would think. So it's not surprising that it's down only 4 or 5 cents. It's not going to go down 50 cents or something like that because GE is thick. If we look at the book, and I don't have the book open right now, you're probably going to see, enough there to chew it up within a dime. So worst case, scenario, obviously news pending the market is I think this thing would open down about 10 cents. So Arbs are saying, and everybody who's working that right now is saying 4 cents, kind of fair value because we got the market up. We have other factors. Can we more buyers come in? And that's where the pricing is. Probably right.
All right. Just real quick, Bull for Trading wants thoughts on Apple. Bottom a few days ago at 146.59. Actually, on Wednesday, gave you a look at that level if you were so inclined to lean on that low. Now $10 above that. 157 looks like a real important area to me. That was the area of resistance the last 2 days, 56.77, 57, 23. Man, this thing gave you a shot all day long yesterday to buy it at the 50% pullback from Tuesday's lows to Wednesday's high. That came in at 152. I just did not pull the trigger on it here, Dennis. I know you have this in your long-term portfolio. When the 13Fs come out, but when do the 13Fs come out again, Brent? Do you know? because we just had him about a month ago. Do you think Warren was buying during that decline? I mean, when he was in there, remember he was talking against his
Possible.
210, 220, and it takes a kind of a haircut like that. But we'll see. I like the 157 area. Any thoughts on Apple?
I still own in my investment portfolio. The stock is very cheap from a valuation perspective. The bear argument is there's one trick pony, and that trick is starting to slow growth, with obviously the iPhone being that trick. But the bull argument is it's cheap. It put a double bottom, 146.59, 146.72. I think that's safe for a while. Buy or pullbacks in Apple.
And the Reverend mentioned he gets pinged on his credit card for services every day for Apple. I don't know. I guess I don't have that many services. Is there any services that you subscribe to that you get pinged on?
No, I don't get pinged on anything, so I don't have the services either. But it depends what you're using it for. So we know services revenue is going to be a big part of Apple going forward, and that's another argument for the bulls. I think there's going to be more products that Apple comes up with. People are.
But haven't we been saying that forever? Haven't we been saying that forever? It
hasn't mattered. I mean, we've been saying that forever, and the stock went straight until 2 months ago. It's been one of the best investments in my long-term portfolio. I mean, I'm in this from $90, and and obviously I've played it multiple times before that as well. It's cheap. I mean, even if it doesn't, let's just say Apple comes up with no new products, they just continue to milk the cash cow that they currently have. If that can even stay stable, things trade 9 times out net cash, or 9 or 10 times. Dirt cheap. But, cheap doesn't always work. We saw that with Micron. So Micron more cyclical, though, than Apple. But if you think, the iPhone, sales are going to start to actually decline, there's going to be problems going forward, that's the bear thesis. But I'm holding on to it in my long-term portfolio because I still think it's cheap. Gene Munster was on our show yesterday and thinks it's a double from here eventually. So I don't know if I'm not bullish, but I'm not bearish enough to sell this thing, and I'm not bearish at all. I think Apple at $150 is cheap.
Okay. All right, Triple D, we are going to let you go here, and you'll be running things with Spencer next week, as I will be off. So looking forward to a week in the sun and the fun, but keep up the good trading there, and we'll talk with you later on.
Okay, Joel, you take care.
All right, and who do we have lurking in the background here?
Good morning, Benzinga.
I love that. It is Sean Udall, CIO of Quantum Trading Strategies. Sean, are you out from under your desk yet with that market cratering the last few days? I mean, I bet you.
I was never under my
you
desk.
were.
I anticipated much of this. I covered the last of my shorts on Monday and Wednesday, and as of Wednesday, I'm levered long.
And why? What did you do? Did they hit your targets? Did you just think this is getting a little bit crazy? I mean, what made you do? Because usually you do things incrementally, right? You take a little bit off here.
I usually do, but I do a lot of work on sentiment work. I mean, that's the second biggest thing I do is sentiment work, aside from fundamental valuation. And basically, sentiment was completely maxed and bombed out probably 3 days. In fact, this is a great stat. The Thursday below the bottom, Monday bottom, the new lows hit a record not seen since 2008 and 2002, I believe. So new lows made basically a crash low, a 2008 low, 2 days before stocks made the low. And that's pretty typical, as you know, of sentiment work. It usually gives you an early signal, doesn't tell you exactly when the bottom is, but you give me another 1,000 to 2,000 Dow points below a 2008 sentiment low. I'm watching, literally I was glued. I really don't like watching the markets like tick by tick. I was glued to the screens for 2 trading days straight. So Monday covered about half my remaining shorts, and then Wednesday, the first hour or two Wednesday, I covered the last of my shorts. So I was white knuckling it. I was, if you want to use the term the first 4 hours on Wednesday, I was probably wanted to be under my desk. Yeah. And then we finally kind of cut loose to the upside.
Okay. All right. And how do you measure sentiment? Is it your own proprietary indicators or?
Yeah, I've done a lot of work. You and I have talked privately about hiring programmers and doing tons of stuff. I mean, I've tested, but 4 decades of data. Had 3 programmers work for me on and off for a few different years. But yeah, some of the stuff is publicly, like on my Twitter feed, you know, I was posting NYMO levels. That's NYMO. That's the McClellan oscillator. That's a great sentiment indicator that anybody can get access to. I think we hit a NYMO of -117. Might have been even lower intraday. Again, I don't even know if I've ever seen a NYMO that low. So basically, here's the other thing. When okay, we're not in 2008. So when you give me sentiment levels of 2008, you know, I'm not going to press shorts into that. I'm not going to sell anything. I'm going to buy stuff. So, you know, that's the basic thing. By the way, I do want to say something. So right when I came on, I heard Dennis say Apple's a cheap stock. I agree that Apple's a cheap stock. Apple's been hammered. I don't think it's a terrible buy now, but I think the biggest mistake that most people make will go back into the broader FANG contingent names and look for big gains out of the old leaders. And I don't think they're going to be, there might be pretty good trades, but I don't think they will be outperformers in coming months.
How come?
Well, this is another kind of historic thing. So statistically, the leaders of the last cycle tend to underperform in the new cycle, and maybe sometimes for multiple new cycles. I mean, you can look at Microsoft as the perfect example. I mean, from their 99 highs, you know, it took them like 15 or 16 years before the stock became a good stock to own again. That's an absolutely extreme case. But, you know, we saw some really crazy extremes. I mean, it's possible that, I'm not saying this for sure, but it's possible a name like, Facebook or NVIDIA or Netflix might never see that high again, or might take half a decade or a decade to see those highs. Again, that's the kind of stuff I don't know, but I would rather be in names I think are going to be new leaders. The last thing I want to do, we'll put it this way. There's no way I want to buy stocks that if they go up enough, I want to short again. And that's probably the best way to say it. So, you know, if the FANG stocks went up enough and quick enough, if the cloud bubble names went up enough and quick enough, you know, those would be basically the same names I was short before, I'll short again. They'd have to go up a lot. I have no interest in shorting any of them here.
All right. So if you're staying away from the FANG names or the former leaders, give us some long names that you're looking at here.
Well, my newest long is Western Digital, which I bought 2 days ago at $34. So, and I will probably keep adding to that. I think there's a really easy trade to sort of low to mid 40s. But I think it's a double or triple. I bought Western Digital, in fact, at 36 and change. I think it was about 36.50, 36.80, something like that in 2016. I sold it for about an 85-90% gain, and at that point, it still had 40 points left in it. So that's I never maxed out my longs very well. But I think a similar move is setting up. In fact, I think this is a better move because I think the coming cycle for Western Dig is actually going to be quite a bit better than the 2016 to 18 cycle was. So I think it's a better buy, much better buy today than it was in 2016.
But doesn't this kind of go against your theory of, the stocks that, led up the rally last time or not? I mean, is the FANG stocks? I mean, because actually this one.
No, because I wouldn't call Western Dig a former leader at all. I mean, it's not a stock anybody really talked about. It was more of a commodity. It's more like a Micron. It's a commodity / cyclical play. Again, Micron went from 10 to 60, but I wouldn't call it a market leader. It was just a cyclical stock that does a typical kind of cyclical trade. Again, I didn't like it above 45. It went to 66. I mean, I didn't like Western Digital above 70. It went to 110. So, people always do the same thing. They get way over enthused about a cyclical stock at the end of a cycle because they still look really cheap and they have momentum. And so the guys that buy the most Momo tend to get crushed the most when things turn. But no, Western Digital is not a market leader. It's just a cyclical. It's a cyclical play. By the way, I will say that they bought SanDisk a while ago. I think one of the best retail products out right now is a couple products made by SanDisk. I think people forget about how good of a buy that SanDisk buy was. And Western Digital and Seagate are pretty much an oligopoly. So Seagate's probably a good buy too, but I favor Western Digital.
All right, Dan, I got to ask you about your old favorite there, Twitter. Mr. Left is doing his best to knock it down here. Stock got up into the 40s, back in the 20s, filled that gap I've been talking about for a while here. Give us your short-term and long-term outlook for Twitter.
Well, it's funny, so I did the first low on Twitter. I think the November 20 low was at 30. So I actually bought that trade. I bought calls when it hit about 34, 35. I sold it. I haven't bought Twitter on this move down. I guess it's mainly because one, I've still got enough, and two, there's just so many other names, and at this point I'm kind of wanting to go to other names. I still very much like the stock. They had one of the best quarters last quarter, best reports. I actually think they have a very high probability of having another very good report. I mean, by the way, don't forget, Andrew left the same thing on that stock, I don't know, 6-8 months ago. It lasted, the negativity on it lasted maybe a week or two. I'm trying to remember what the price did. I can't remember the exact. I want to say Twitter went from like 36 to kind of 20, 28 last time. And then once Twitter started having some of their own catalysts, put it this way, I think some analysts will pretty soon start talking about the odds of a pretty good quarter, and that will be the next good lift for Twitter. So yeah, no, I mean, I still like Twitter. Twitter's still a portfolio long, but there's just so many things. I think, put it this way, I think we're in the area now where the ticker doesn't matter as much. So I'm kind of going after stuff that's more speculative.
Like what? What else?
With more upside.
Give us a couple of others.
I bought some T-Land. That's TLND. In fact, that almost held the November 20 low. By the way, that's another thing I'm looking at. I like, now what Western Digital didn't hold the November 20 low, but a lot of the stocks I'm looking at are either at or already above the November 20 lows. I actually think that's kind of a key technical reference. And T-Land almost held the November 20 lows. That was the name. Again, they cut that in half. I wouldn't call that a former leader. It kind of deserved a lot of the growth it had. Spotify looks good. What a COM. Okay, look at the chart on COM, COMM. So again, everybody loved this stock between like 33 and 42, and look at it now. It's 16. It's the same company. I had no interest in it at $40. But if you're gonna take it off more than a 50% off sale, I think it's highly interesting. So that's the kind of stuff, I mean, a COM, hell, I mean, a COM could go to 25. I mean, just think about the percentage return on that, I mean, so, I still like Cloudera. Cloudera is $11. If it goes to 18, that's 70% move. And then stock's not expensive at 18. Anyway, I mean, right now, I don't even know if the ticker matters as much. I mean, we could be in a phase where, you know what I mean by that, right? Like everything basically goes up the same amount, and the stuff that's sort of lost the most goes up the most. So I think maybe by the end of January, after earnings reports, the quality and some of the stuff starts differentiating itself again.
All right, Todd, let me ask you about one. I know you were eyeballing. I don't know if you got into it all. Redfin, that stock, once again, here's a stock that did not take out its November 20th low on the rebound here. You still keeping an eye on Redfin, RDFN?
Yeah, in fact, I built the Redfin long over time. I was actually buying that into the November decline. And so I don't know, I don't really need to add to it because it didn't really go much below any prices I was adding to. I took a little bit off when it went to 18-ish. But pretty much all I'll be looking to do is maybe buy back when I sold. But I there again, here's the interesting thing about Redfin. One could argue, and I'm not a big believer that the Fed caused this whole sell-off, by the way. My whole thesis, and I think it's been proven, is that we had a FANG in cloud bubble and it unwound. And so guess what happens when FANG represents a huge part of the indices and FANG drops an average of, I even did this for the show today. The average decline in FANG from off the highs is like something like 42, 43%. Well, you know how big of a component FANG is to the indices. So there you go. There's your cause of the crash. FANG declined 43%. So since FANG's such a big representation of the indices, there's your crash. But anyway, so if there is a stock though, or a group of stocks that have been hurt because the Fed it's stuff to do with the real estate market. And so Zillow has a really interesting chart, by the way. That ZG, I'm kind of looking at them. I don't love that name, but I think from these prices, I think there's quite a bit of upside.
Bottom fish.
So things like Zillow. Oh, go ahead.
No, I just want to get another ticker or two in here. RCA is asking about SLCA, and that is Silica Holdings. Is this a stock you follow?
It is. I haven't done much with it. I think I own this stock. I have a very small position, which I thought was a cheap price at in the low 20s and high teens. So this is one. I'll be pretty happy if I get back to even on this one. This is kind of sometimes, to be honest, I do like Silica. I think it's a good value. I've been looking at names like Devon and APA and Schlumberger. I did not buy any Schlumberger, but I put a recommendation out to Schlumberger to my subs on 2 days ago as well. That's a really bombed out chart, as you know. It's probably the highest quality oil drilling company in the world. So same thing. I mean, it's like, look, I mean, this thing straight line down. I think it's totally overshot. Doesn't mean it can't go lower, but I mean, this thing could retrace to like 48 to 50 bucks. I mean, just like a Fibonacci bounce that's highly probable is something like, again, even worst case is probably a bounce to like 42 to 45. I mean, I think a bounce to 45 would be close to 35, 40%, something like that. But this is a very high quality name. I will probably regret not buying Schlumberger if I don't, but I'm not sure I will. Goldman Sachs is another thing that's totally bombed out. I mean, there's so many names that are just ridiculous.
What about Square? Last one, Square. Any interest in this one, SQ?
I don't mind Square, but now I would put Square in that former leadership camp. I would say I like Square more than I like the FANG names. But again, Square's a stock I frankly should have shorted. I mean, I don't think it had any business being between 88 and 100 bucks. It was very overvalued there. I mean, this was a $10 stock in 2016. So I don't know. I have a hard time getting a valuation number on Square. If it did something crazy, went down like a 40 or 35 or something, I would almost certainly get long it. Again, it's like I'd rather own a Qualcomm. I'd rather own some really, really beaten up cloud names. Honestly, I think I'd rather buy some semi stocks. Everybody hates the semis. I think I'd rather buy. I don't have a ton of semis I like, but the semiconductor names I like, I think I'd rather own than Square.
We've been on the line with Sean Udall. He's the CIO of Quantum Trading Strategies, bringing us his fundamental and technical and sentimental outlook to the market. Sean, we always enjoy it. Have a good new year. We'll be dialing you up early in 2019.
Yeah, let's talk before, I don't know, name one of the key earnings reports, and let's talk, because I do think the setup into earnings will, then we get it, then the real game begins, I think.
All right. We'll let you go. Thanks a lot, Sean.
Take care. Hope you're trading well.
All right. S&P's up 8 points here, 25.03 even. Let me see what mid-range is here on the session. We've had a pretty good range. Mid-range is 24.9850. Below that area, you have the close at 24.95 or 24.95. Pre-market lows in at 2477.75. And that 19 and a quarter high, that's just above your 5-day high of 25.18. So there's some levels. I'm sure we'll get a lot of seesaw action going both ways. I hope everyone has a good trading day, a good weekend, and you guys take it easy on Dennis and Spencer next week while I'm out, and I'll speak to you guys after the new year.